Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video again, we're going to do something a little bit different today. We're going to go through how I use an RSI indicator, or how you could potentially use an RSI indicator. And typically with the RSI indicator, I look to see where the market is potentially in an overbought or oversold condition or at an extreme point, and try and combine that with other indicators as well. So we can combine that with moving averages, for instance, or we could even look at potentially combining that with some support and resistance. So looking at the euro dollar time frame chart currently, looking at the 4-hour time frame, we've looked at this in the past where we discussed how to use trend lines and how you can use trend lines effectively. Now in this scenario here, what I'm going to look at is how I use it in a downtrend in market. Okay, so for instance, we've got this little downtrend here that we've been eyeing up for a while, recently seen the breakout, but what I'm going to do is just apply my moving averages. So I've got a 20, 50, 200 running through there, and what we can do is look for areas where the market goes overbought or oversold after certain conditions are met. So we want to be in a downtrend. The market bounced from this key resistance level, so I'm waiting for my moving averages to cross now in line to look for those short positions. And you can see here on the 9th of July 2019, the 50 crossed the 200 and the 20 was below the 50. So that's a good opportunity for me to have a look at trading opportunities. Now typically you can look at just the bounce off the averages for positions, but if you combo up the RSI indicator with this, you can have some strong moves. So as you can see in here, the market bounces up into our moving averages, and if we take a look at the RSI indicator, it starts to go into that overbought condition, okay, where typically I would look for shorting opportunities. So in here, let me just narrow that field of view down a little bit on here. So in here, it gives me the opportunity to look for those short positions. Now, if I was to go short in any condition here, we would have had a profitable outcome. Again, the market bounces up and wait for the market to hit that condition. And you can see here, in line with that spike higher, the market produces a bearish candle after a strong bullish signal, where typically you probably see people trying to buy the market, and then we see the market continue down. Again, coming into the conditions over here. Now the only difference here is the fact that the 20 has crossed the 50. So again, we're still in the downtrend, still looking for those short positions. So in that case, you could even look at where the market's currently at and what the current conditions are. So you still want to be short. Market goes into that overbought condition. Are you at any key significant support and resistance? And if you look left at that moment in time, the market is actually testing this resistance zone through there and actually produces a false breakout. So you could look for a short opportunity on the back of that for a nice move down. Obviously, this is all hindsight stuff. Go and have a look at this yourself. But again, it's just adding those confluences up. So instead of getting short off the 20 moving average in there, you know, I do like looking at the 20 moving average bounce, but if you combo up these, you'll get an opportunities, better opportunities, with higher probabilities. And this is just a simple 4-hour time frame. You don't have to go up into those hourlies or anything like that, or even lower than that. You can do, but obviously you have to do your testing, make sure that this strategy or these conditions work for you. Again, market comes up into these lows, so you'd wait for the key resistance to be found. Again, comboing up those confluences, market goes into those conditions, the market sells off before bouncing from the support. So Real good way of comboing up the indicators. Remember, never use an indicator on its own. They are lagging behind price, so you really need to be careful with what you're trading with when using indicators. But comboing them up is a good way of building a good strategy for yourself. So thanks for watching this video update. Hope you've enjoyed it. If you want to see more content like this, drop a comment below the video and drop me a line to say what you'd like to see from these videos. Typically I might do these on a Monday. So thanks for watching, and I'll speak to you soon.